Just want to welcome everyone to the second virtual education luncheon of 2022, which is Riding Growth Waves. My name is Vivek Maharaj, and I am the programming chair for CFA Society Winnipeg. Just as everyone is aware, CFA Society Winnipeg has now served the Winnipeg investment community for exactly 70 years, promoting ethical and professional standards within the investment industry. Our society is an active participant and innovator within our international organization, the CFA Institute. We're also a member of the CFA Societies Canada, which promotes advocacy efforts to our federal and provincial regulators. And CFA Society Winnipeg provides our members with professional development and educational opportunities like the one that you're joining for us for right now, and job placement services, and membership and networking events. So today's discussion focuses on the process of researching and identifying growth opportunities. So Joe Faraday is joining us from Baillie Gifford Investment Management, and he'll be exploring research into innovation and the rapid rise of new industries and technologies. So he'll reveal the steps taken to research the innovative companies we all want to identify, and uncover how key clusters of certain companies could have outsized effects on economic growth and development. So before he gets into all of that, I'll just tell you a little bit about Mr. Faraday. So Joe joined Baillie Gifford in, 20 years ago, and he's been a member of the International All-Cap Portfolio Construction Group for the past 15. So he's leading the International Investment Specialist team. He graduated with his master's in engineering in chemical engineering from the University of Cambridge in 2002, and then got his MBA from the University of Edinburgh in 2009. And he's also a CFA charter holder. So before we get going with anything, just to mention, you may have seen the message in the chat, but we're going to have a Q&A session at the end of Joe's presentation. So feel free to put your questions into the chat bar, and then we'll try and get to as many as we can before we wrap up at the end of the hour. So looking forward to getting questions from the audience here. Now, before we get going as well and hear from Joe, I'm just going to pass the mic over to Anthony from Baillie Gifford.
Great, thank you, Vivek, and to the Society for having us here today, and obviously thank you to all the attendees for taking the time to join us. My name is Anthony Spaniolo, and I'm part of Baillie Gifford's Canada team, normally located in Toronto, but today I'm actually in Edinburgh, Scotland. Some of you might know Baillie Gifford from the earlier webinars with CFA Society Winnipeg, so you'll know that we're long-term investors, and we are looking for the most exceptional companies. So today, we're talking about how we search for those ideas and how we think about innovation. And to help frame this, an element that we think is really foundational to finding standout themes and companies is having the ability to think outside the box. And to help our investment floor do that, at Baillie Gifford, we look at hiring investment people from non-finance related backgrounds. And we do this to help incorporate cognitive diversity right into the investment process. And as Vivek mentioned, Joe Faraday, who's going to be taking you through this, he's a great example of that because his background is in chemical engineering, but his career led him to his current responsibilities, which include being a member of our International All-Cap Portfolio Construction Group. Now, I completely understand that it's unreasonable to ask people to redo their academic careers in different fields, but what we really want to come across today is the importance of having open minds to thinking differently and questioning the status quo. So for us, we really believe that to be a leader in something, you can't just follow what others are doing. And Joe's going to be taking you through what we find helpful to uncover those exceptional companies. So we hope that you do take something new away from your discussion with Joe today. But as Vivek mentioned, please do ask any questions that you have for Joe via the chat function at the bottom of your screen, and that's going to be monitored, and we'll make sure we get them over to Joe once he's done. So thank you again for joining us today, and I'll hand it over to Joe.
Thank you, Anthony, and thank you, Vivek, for the introductions, and good day, everybody. So today we're going to talk about riding growth waves. So what do I mean by that? I consider growth waves to be the growth investment opportunities that we at Baillie Gifford are excited about. I think it's really important to emphasize it's across all our investors and all of our strategies. Now, I could have titled this session something quite different to that. I could have tried to title this, What's on Our Investors' Minds? Because what I'm going to try and get across today, I really want to emphasize, is a collective view from across the 140 or so investors that we have, the 50 or so different investment strategies that we have. And I'm going to do that by examining all the research that our investors conduct. So utilizing what we have in terms of a digital research library and the thousands of notes that get published to that on an annual basis, and also looking at a huge back catalogue comprising tens of thousands of notes. So what I want to try and relay is what's on our investors' minds as that big collective and how that evolves or changes over the course of time. Another way I could have framed this could have been trying to explore, examine what I frame as being the hidden research engine room that we have here at Baillie Gifford, or you could think of it as at any manager. I feel far too often in the industry, we go from the index or the opportunity set all the way on through to the end portfolio, and that's what we compare and contrast. And we miss out the really valuable part of any manager's process, all those little incremental steps in terms of idea generation, research, portfolio construction that go in the middle. And I think that some of what I'll share with you today is trying to garner some insights into that we can learn, improve how we actually are going about investing. So in short, we'll get stuck into this. Riding growth waves is about examining and showcasing investment research efforts and the growth investment opportunities that we feel are exciting out there in the world. So if I may, I'm going to start with a quote as well. So information is abundant. It flows through so many sources that once was a river one waded through is now a flood we struggle to keep afloat in. And I think we all struggle that with every aspect of our life. This is from a Middle Eastern reporter. And what I think is absolutely key is we've got to share insight, not just information. So we've got to take whatever the quantum of information is out in there and what's the point caller, ascertain what is really of interest, what is the insight. So I'm going to do that for a few visuals in a moment. To start with, though, I'm going to step back a little. And Anthony, and I'm sure some of you will certainly have come across Baillie Gifford, our long history. We've got some clients for sure in Winnipeg for many, many years, decades. But just to touch on the history of the firm and the great pride that we've always taken in our research and garnering insights. So we date back to the early 1900s. There was a Baillie, there was a Gifford. And what I find quite intriguing in the early 1900s, Carlisle Gifford was known for wanting to work with people of inquiring mind. And back then our investments were about minerals. There was the gold rush, there was the rubber plantations out in the Far East, and there was the North American railroads as well. If we jump all the way forwards to today, I think there's a lot of similarities between what Carlisle Gifford was saying back then. We like to think we work with people that are curious about the world, that are thinking about it rather differently. And when I think of growth, I think there's three common factors that have almost stood throughout time, throughout the many decades of what we're looking for. And I coin those as being DTT: disruption, trust, and technology. What do I mean by those? Disruption in terms of radical change, either at a company, an industry, or a sector level. So some radical change that's coming through quite significantly over time. I think of trust as actually being quite a rare commodity in thinking about the allure of a given product or service. But you can also look at trust in another way about corporate culture. Will those actually endure and prosper? So it's slightly multifaceted. And technology, far too often we think about that's just about the current times, it's about today, but it has been there throughout. And we should just need to think of it as being major advances and breakthroughs in terms of discoveries and inventions and research and development. So if we think about research efforts or where we've looked for growth, that there's remarkably, on the one hand, it's been consistent. Our job is to look out there, but in a consistent, pragmatic framework, being curious, patient, and brave. There's that DTT that's almost united over the course of time. But also we accept, on the other hand, it changes. We uncover different types of growth, and we've got to remain very open-minded to that. So let's get into that and explore how that shows through by uncovering certain aspects of Baillie Gifford research efforts. So the next slide is just a few caveats to try and frame some of the analysis that I've done, so there's full disclosure on that. I've used a small team of developers to help me on this, to do a lot of heavy lifting. We've looked at 25 years of research reports, and those comprise full reports, meeting notes, updates, anything that's been published to our digital research library. And that comprises, give or take, 63,000 reports. So there's a vast quantum of information that's gone into that. The machine does all the heavy lifting. It all gets quite quirky, but there's basically, we're utilizing the developers coin it as sort of 300 dimensional vectors, and then using tagging to form clusterings of topics. And ultimately the aim with all of this is to look at the research efforts in their entirety, and what does that reveal? Rather than someone like me cherry picking a few interesting topics or what I gut feel or behaviorally think is of interest, what does this tell us about all of the research that we're conducting? So I'm going to do that over the course of the next few slides with two visuals that I coin as being waves and quilts. So first up, if we toggle on to the waves graphic over the course of time. So let me explain what this is. So this is taking all those research notes going back to the year 2000, that huge back catalogue. We are using simply MSCI sector classifications to tag all those notes and bucketing them over the course of time. And the waves or the colors, the visual you can see up in front of you, depict the sector exposures. Now, just to be extremely clear here, this is our research. It is nothing to do with the actual index and the size of the indices or the sectors within that. It is nothing to do with the end portfolio. This is purely looking at the research that we're conducting, that engine room of research. All our investors are working on, sharing, thinking, idea generation, maintenance work on existing holdings. What does that look and reveal? So this is a really valuable part of our process, that huge bit in the middle between the index and the end portfolio. So let me just call out a few things that jump out on this. So there's a dark blue band that's pretty consistent and has become a bit more prominent over time. That's information technology. There's a light purple band that ebbs and flows, is quite small, balloons out in the mid-2000s, comes back a little. That's industrials. One that's quite interesting is in yellow is healthcare. You can see it's been there throughout, but it's really broadened out, become much more significant in our research efforts in more recent years. And then there's a slight contrast. There's light blue. You can compare that to lighter pink. And light blue is consumer discretionary. You can see how large that's been, kept on getting bigger over time and more recent years again, versus a lighter pink is consumer staples. So it's been there throughout time, but actually got quite a bit more smaller over the last decade or so. So overall, this is showing where are we focusing our research efforts. It's split by conventional sector types, is over time. And we can use that to think about where are we researching, what's likely to get into portfolios. You can think about lead times on research, the gestation periods, and all of that intertwined with early stage thoughts, building up convictions in holdings over time, and then what translates into portfolios. So that's one way of looking at this. That's what we coin as being our waves graphics. I now want to turn on and just explain one way of doing a compare and contrast with this. So on the next slide, this is a comparison just against the index construct. And I've basically taken the groupings from the last year. And you can see the big topics, or where we over-focus our research, is in consumer discretionary, healthcare, technology, industrials. Where we underweight or under-focus our research efforts in areas like basic materials, telecoms, and financials. And when you start doing that kind of comparison work, it helps shape a little bit of thinking and understanding about what shows up in our end portfolios, but also how that might change or evolve over the course of time as well. So the next way I want to share or showcase this is where the machine starts to do all the real heavy lifting, is what we coin as being quilt graphics. And a thanks or a shout out goes to a certain Canadian consultant who who came up with that naming for us, and we were discussing with them quite recently. So what we do for this is we use machine learning to come up with the topics. And to be clear, that's not myself, it's not the developer, it's letting the machine do that. It's looking for patterns in data to find clusters of similar documents and then assigning those topic labels. And what we can do with this, we can look at what's changed, emerged, or falls by the wayside over the course of time. So the first way of looking at this is looking at the cumulative, so those 63,000 or so research notes, filtering those down. And what we've done here is we picked the top 30 topics that show through, so cutting off quite a large number of smaller ones. And on this, the larger the box, essentially, the much more prominent the topic. So this is taking the tens of thousands of notes, what shows through. And I'll ask you to try and remember the four most prominent ones here. So semiconductors, or semis, industrial engineering, pharma, or we can think of it as healthcare, and software. So those are four really big areas that show through in our portfolios, have done recently, have done through the years, through the decades. Those are the most four prominent topics. There are other smaller ones as well, and happy to dig into those if any of those perk your interest. But what we can then do with this visual is we can start cutting it up in a variety of different ways. So the one way we can do that is over the course of time. If we toggle on and we look at this over the calendar year 2020, what's quite interesting from that, we're trying to emphasize those top four topics. They are the same ones, but in a slightly different order. So the top four in calendar year 2020 were pharmaceuticals or healthcare, industrial engineering, software, and semis. So it's almost kind of, there's a bit of rhyming in the history. Those link into the earlier waves visual, thinking about IT and industrial groupings, or the comments I gave towards the start about disruption technology. So these are big, prominent areas. And if you look back over the last decade or so, those four have pretty much always typically been in the top 10 as you cut this up by rolling years. So I think that's quite revealing. What are the big structural growth waves that show through in portfolios? It's also quite interesting using this to dissect and start looking at what are the newer potential waves that are coming through. And you can, again, take your pick from this. But to call out a few from 2020 that I find quite interesting, there's the likes of gaming. So you can think of Sony and Nintendo and Ubisoft and Tencent. Another grouping would be luxury goods or luxury items. You can think of LVMH and Kering, Hermes, Farfetch. So a widening of those businesses, some held for a long period of time, some more recently entering portfolios. And another one would be payments. Lots of new disruptors coming through there. So Adyen out of Europe, or Wise in the UK, or Affirm. There's a large number of those businesses. So lots of research efforts, and ultimately that translating on through into holdings. So if you pick any example from the quilts or the wave visuals, they each have their own story. They can into idea generation. They can help think about existing holdings. Or you can also use this as an indicator when things start to fall by the wayside and when they may get sold as well. So I hope from some of this, it reveals a little bit on the growth wave, so the growth topics that interest us. It's sharing some insight to what's on our investors' minds in a sort of a much broader context, but trying to simplify that down to a few specific topics, or where we're over-focusing our research efforts. And also just how important that engine room for idea generation and research is for us at Baillie Gifford or any manager, and how we need to try and sort of scrutinize or understand that as best as we possibly can, getting from that big universe actually on through to a portfolio. So I now want to shift my remarks and talk a little bit more about actually portfolios. So far I've talked about research areas, but I want to take that on through to what translates from research into the various portfolios that we run for our clients. And to do that, I want to frame my comments around four big growth drivers. One of those is healthcare. So one of the top four topics we saw on the earlier visual. So people living longer and healthier. The second being one that's very pervasive or widespread, the internet revolution. So the world shifts ever more online. Then there's the rise of the middle class or consumerism. And the last one is technology across many end industries. And for those, I'll give you a few sort of high level comments, but I think what's more important for me to share is research examples, and you can think of this as being Baillie Gifford research uncut. So I'm going to take examples from the notes that we have on our library and excerpts from that to showcase how we think about businesses across these four areas to help frame the thinking and understanding and the research processes that we go through. So the first growth driver I want to touch on is healthcare. So we think of that as we're in a great world at the moment. People are living longer and healthier. There are massive improvements coming through in healthcare, in diagnostics, in understanding. We see there being a tipping point of us transferring from almost a sick system to actually one which is focusing on health, identifying issues upfront in advance of time. Let's provide proper cures, treatments. And there's fascinating areas that would be the obvious ones here in areas like vaccines. There's Moderna and BioNTech and lots of those that I could give. But I want to frame this a little bit around some of the other facilitators that are there, some of the picks and shovels or equipment or solution providers that operate a little bit more behind the scenes. So the research example I'm going to give here is a company by the name of Sartorius. So if we shift on to the excerpt I've got from one of the leads we have on our healthcare innovation strategy. And Sartorius is a German laboratory equipment business with a focus on bioprocess equipment. It's family run. It's got a history over 100 years. It's a leader in its field. We know it pretty well. We've owned this for 4 or 5 years in most of our portfolios. There's over 30 different notes on our digital research library. And this is an excerpt from last summer, and meeting the company at the end of the note, just trying to reaffirm or reappraise our conviction here. So the one excerpt I like to pull from this is just thinking about just how pivotal this business has been and it's had its biggest test in its history, as have had many other healthcare businesses. And just how reliant many healthcare companies have had to be on Sartorius's technology, both in preclinical development and scaling up of manufacturing. So it's a key hidden champion. It's a picks and shovels business that everyone is reliant on out there. There's also aspects of this in the note about the confidence in the business. So it's positioned to remain a really strong player, 20 to 30% market share across the whole gambit or the entire spectrum of development and manufacturing biological drugs. So this is an excerpt from a meeting note. It's, again, topping up our knowledge. It's challenging the business, going through thinking about and developing our ongoing understanding and conviction in the company. So that's the first example I want to give for healthcare. If I now turn on to the next growth driver, that's the online or the internet revolution. And here I want to try and emphasize the elongation of the growth that we see here. And there's a certain academic we've got a huge amount of respect. We've done a lot of work with by the name of Carlota Perez. And she does a lot of work on technology and socioeconomics and technology revolutions through the centuries. Now, what's quite interesting from her work, I'll try and summarize it, but she cites it as technology springs up in a fairly narrow part of the economy. It's adopted quite widely in a few specific segments. And you get the development of very monopolistic, very large, giant monopolies as a result of that. And then what follows is a degree of unrest, inequality, regulatory gets involved. That's typically the start of the rise of a technology. What you then move on to is it becomes more pervasive. You go into an installation and a deployment phase, and you get this much more broadening out to many other end industries. Many other companies get involved. Everyone takes advantage, and you end up with this golden era where it becomes very widespread. And we think you can apply that very much to online, the internet, and the journey is really getting started. Many seem to be challenging it's over, but we're framing as we're really early on in that development. So that helps us step back and think about lots of new opportunities across internet or online platform businesses. And I'm going to give 2 examples from our research efforts through the years to showcase this. The first of those is to try and emphasize institutional memory. So I picked out Tencent, which everyone will be fully aware of. There's 100+ notes on this business. It's been widespread. It's held in extremely high regard. And I've actually pulled out a note all the way back from 2008 to try and showcase institutional memory. It shows the importance of being optimistic and also going back and appreciating what we've written on in businesses in the past or through the years. And the range of outcomes here, or written back then, is just the same as it is today. So it's possible that business becomes worthless because of regulatory government intervention, technology nullifies itself. On the other hand, this has got a formidably strong competitive edge. It's got rising returns, it's got massive growth potential, and this could become one of those valuable internet assets in the world over the next decade. And that turned out to be very right back then. This has been a tremendous investment through the years. But we'd also cite a lot of those credentials still stand today. We've got to be really open-minded in the range of outcomes. We've got to pull that back and think about how wide a range of the scenarios are for any given investment. So that's Tencent. I'm going to toggle on now to talk about a business in much more recent times, and that's a company by the name of Zalando. And for those that haven't come across this business before, it's a leader in online apparel in Europe. This is an end market many are trying to conquer world over, many have struggled, but Zalando appears to be emerging as the clear online fashion retailer in Europe, and it's got potential to move into other markets around the world as well. Our old notes date back to around 2012. We built up more conviction on the business over time. It listed and then became more widely held. But this is an on-site visit from last summer from one of the international investors, and I quite like this in thinking about the valuation, or how we need to be blue sky and think about where a business could get to over the next 5-10 years. And it states it simply. It says, let's think about this crude and simple. And it lays out the addressable market, the TAM, potential market share, potential margins, and then what is the level of the upside. And without too bold an assumption, this is framing as Zalando is a sort of 5 to 10 bagger over a 5 to 10 year period, if we aren't even that aggressive with our assumptions. So looking to the upside, looking at the opportunity. So I think that's a glowing example of that, showing through in ongoing research that we conduct. If I now turn to the third growth driver, and that's the new affluent or the rise of the middle class. I like to think of this as being consumerism world over. I think there are the 3 Ps that underpinning is more people or population growth, it's rising purchasing power, and it's big upgrades in productivity. People move from farm to factory to office, and maybe it's even still office to home working and back, and we toggle between that. I'm always humbled by the late Hans Rosling's works on all of this. His book Factfulness, I always love to call out. He cites us as humans as being worse than monkeys, trying to ascertain how incredibly valuable the structural growth drivers are to consumerism, whether it's birth rates, literacy, those 3 Ps, what that can ultimately lead to. So this is a big area. I cited earlier in the ways visuals, the likes of the discretionary and the staples stocks. So I'm going to give 2 examples here. One's from our research library, and that's a company by the name of LVMH, Louis Vuitton. This is a note from 2020. It's the summary at the front end of a report. And it's a reminder of the importance of, let's just get back to the real basics. What are the key ingredients to success, and that continuing, and calling that out really clearly. So for LVMH, it's focus on mass luxury. It's the fact that big brands can get even bigger. And also the approach here of Bernardano, the founder, of buying and holding. He has a saying in luxury that there will always be people who want the same stuff as others, but better. And it's the kind of business we think of, just the sheer resilience of the high levels of compounding that you can get in this type of company over the course of time. So LVMH is one that's held in some of our portfolios as a discretionary name that we found inherently very appealing, thinking 5, 10, 20 years out, that power of that compounding, enduring, doing the same in a given business. I actually now want to contrast that a little bit about how views can and need to be able to change over the course of time. And to do that, we've done a huge amount of work. This is focused a lot on China. Our Shanghai office done enormous efforts on this, is the rise of Gen Z. And I've laid out a few headings for this, is primarily from a Western lens, but it's in just thinking about how consumer habits or work habits can change from millennials onto Gen Z. And these are pretty familiar. Gen Z spend more time online, more video streaming. They prefer actually face-to-face in the workplace. Allegedly, they're more practical, they work harder, they like saving money. So there are some big structural differences. And this is the generation, as we all know, are entering the workforce. Now, so what does that mean? Well, it also means that we've got to appreciate values are changing. Maybe it persists in luxury, but perhaps it won't do so for many other consumer goods. And one example there where we keep challenging ourselves on is the likes of the sporting apparel businesses. And if you look at a market like China, so Adidas and Nike have been tremendously successful there over the past couple of decades, but you now have homegrown champions like Li-Ning becoming much stronger over the course of time. And the big debate then to have is, if there are these changes in consumer patterns, who is the likely winner out of Li-Ning, Adidas, Nike over the next decade or two? So remaining open-minded, challenging ourselves in the research that we conduct in thinking through that. So it's not a static, things will change over time. The fourth and last growth driver I just want to walk through is what we call technology and industry. This is quite widespread. There's areas like semiconductors where we're fascinated by the ongoing advances and Moore's law, the likes of TSMC out of Taiwan, ASML out of Europe. There's factory automation, there's software businesses, there are a number of industrials. And I'm going to give two examples from history to showcase this a little bit. So I'm going to go back to the days before we had any form of digital research library to start with. And the first example I want to give you here is of Atlas Copco. So Atlas Copco is a leader in compressors and vacuum equipment. It's been held in our portfolios for many decades. And here I've got a handwritten note I've given you an image or an impression of from 1986. It's written by a certain young at the time James Anderson, one of the lead investors we have here at Baillie Gifford. And apologies, it's quite faint. But what you can see there is remarkably similar to how we look at businesses today, is walking through the various fundamentals. There's even looking at the TAM, the total addressable market, where the future might lead, the types of things that we're now considering today. Where is capital deployed? How might this business change? Talk through the potential for acquisitions. So I think this is a really good way of illustrating the depth of the research that we're fortunate to have and that sheer importance of institutional memory. The final example I want to share from our research library is about blue sky thinking, but also one I think we would argue that we got right for a while, but also got very wrong. We exited and sold and moved on. We actually failed to stay as open-minded as we should have been. And that's Apple. And I pulled out a research report from 2009. Now, where we got Apple right really early on was thinking about the sheer size of the end market. So a lot were framing it around the smartphone market and going, Apple has high teens market share. And our view at the time was that was completely wrong. The framing or the referencing that was going on by many in the industry was just the wrong mindset to be thinking about this. It was about thinking about all handsets. Even there was a line in one of the minutes or the write-ups, could we be in a world where essentially everyone has a smartphone or everyone has an Apple? So that's an example of trying to be really open-minded and what led to investments in that type of business early on and the successes there. I'm happy to reflect on where we make mistakes or where we get things wrong. I would frame it around pricing power and that dimension and thinking the growth runway would run out. So that's the final example I want to give from our digital research library. Now, to pull this all together a little bit, I want to end on a couple of comments that try to unify our research a little bit. So the first of those is one comment, like our founders, Colonel Baillie, Carl Gifford, we like to work with people of inquiring minds. I think we've really got to emphasize we feel the need to be curious, patient, and brave when it comes to our research. The other facet would be that research takes huge efforts. And there's an excerpt here on the right from the 100 Years of Baillie Gifford. And it says, overseas trips in those days were quite something, with analysts traveling huge distances by boat and steam train, and a year or so later returning to Edinburgh to deliver a report. Now, I would actually say, like 100 years ago, we still go to great lengths and efforts in our research. Okay, the overseas travels is now returning, but it's still pretty cumbersome. Almost there's some parallels there. But the endeavors to garner insights and the long gestation periods to ideas is remarkably quite similar. So we've got to be long-term, we've got to be optimistic, we have to take our time. So if I try and conclude, today, I hope I've stimulated some thoughts on growth waves. So what are the growth topics that interest us? What's on our investors' minds over various timeframes? And the importance of that engine room for idea generation and ongoing research, and that stepping stone from the universe to the portfolio. And I'll end on a quote by a writer, Rob Liano. And he says, knowledge is power. He says, no, knowledge on its own is nothing, but it's the application of useful knowledge. Now that is powerful. I think it's really important that we try and garner insight, and it's not just about information. And that's hopefully what I've tried to share with you today. It's about insight into that research process, into finding growth ideas that will help us be successful over the long term. And with that, I'll be delighted to take any questions or comments you may have.
All right, thanks, Joe. We definitely do have some questions, so we'll rip through some of these. Aaron was just wondering, where would cryptocurrency have fit in on that wave chart? Like, would you have seen that landing in the financial or technology section?
Yeah, so what's quite interesting on the topic model, I've only picked the top 30. So it emerged about 3 or 4 years ago. It was the largest changer in 2021. So that's become very prominent, and it just entered the top 30 in 2021. So it is a category in its own right. It was small in earlier or prior years. I think it perhaps is a good example of, what are the new mini waves coming? Some of those make big breakthroughs, become larger. Some of those fade away.
Okay, so it wouldn't necessarily even be tucked into any category. It is its own bucket.
Yeah, and sometimes it can be hidden in somewhere, and then it'll emerge as its own. So it's one I know from last year. I think it had something like a 5x increase in notes being written. I was actually discussing with our developers this morning. We're trying to do work on not just volume of notes being written, but eyeballs as well. So how much notes are being read. And it jumps out on that as well. So a Coinbase has 100 reads, whereas some of our other research notes have, single digit or into the teens reads. So it's quite interesting from that as well. It seems to be the area that someone does some work and it's really widely read as well.
Yeah, I'm sure we've all seen a lot of opinions and research on the crypto side of things. We got another question here from Alec. Just wondering, when you assess a company's culture, to what extent does that involve human judgment versus some kind of a numerical measurement?
Yeah, I want to say both, but I think the way I framed it through time, it's become far more qualitative than quantitative. There is no secret black box, and we've tried to do work with the corporate governance and the risk team on this, but there's no magic formula on 10 years inside ownership. That shows through across portfolios as being features, but we find that really hard to put into any kind of, let's say, model or way of dissecting that. And I think we've got almost 3 management types across many of our portfolios. There's visionaries, so the Elon Musks of the world. There are sort of the family founders. So one of my favorites there is Shimano. I think we're now in the 4th generation of the Shimano family, so just strong stewards of businesses. And then my 3rd category, this is slightly unfashionable, but I call them professionals. And it's not saying all the others aren't professional, but sometimes you want the management consultant, or you want someone coming into the business who's an independent. So one example there is Shiseido, the cosmetics business, was family run for over 100 years. And they brought in Uotani from Coca-Cola to be the CEO. So I think it's much more qualitative than it is quantitative. And I think, even thinking about the way we're depicting our research here, we've got to get those qualitative aspects. And I find this is formidable in sort of machine learning and drilling into the language, rather than what do a few of the financial metrics or for example, on management. A lot of what you can drill is how old they are, what's their tenure, what's their inside ownership. That gets you a little bit of the way there, but it doesn't give you the complete answer.
Okay, so yeah, there's a lot of intangibles that are hard to measure traits when we're talking about management. Yeah. Okay. I've got another kind of interesting question here from Chris. He's just noticing that most of your company examples were trading at fairly high valuations, which I guess is typical in growing companies. But just wondering how Baillie Gifford thinks about general valuations and how it plays into your buy-sell decisions for growth. Just kind of adding in here, just wondering, does the firm have a hard buy-sell band, or does it depend on the company and sector?
Yeah, so I think this is a fascinating one for us, especially at these times, but as always, and we've got to go back and remind ourselves always, all the time, whether you're Baillie Gifford or anywhere, we invest in stocks, not just companies. There is a price, and our ultimate aim is to generate returns for our clients. So let's not lose sight of that. That is crystal clear. I'll give a process answer to start with. When I think about how we spend our time, I frame it as half of our time is spent thinking about growth. I then think about a quarter of our time is spent on management and ESG. And then a quarter is spent on valuation, upside, and almost discipline. What's the range of outcomes? What could go right or wrong here? Now, be careful with that as well, though, because also all that growth part is clearly valuation. Where is this business like to be in 5 or 10 years? And that's what we overweight in our process. Let's get left of the decimal point. Let's imagine where a company could be 5, 10 years out, and develop the conviction in those growth rates. And I think that's what serves us well over the course of time. And I go back to the international portfolio, for example, I run, is having conviction in what's the likely level of growth. So I believe, and the group I work with believe, that our company should compound at 15 to 17% for the next 5 to 10 years across the 70 to 80 holdings. If that follows through, it's slightly flippant. It's almost valuation looks after itself. But our job is to find companies that are deploying capital, that are growing very, very strongly, and then ultimately plugging into, do we have a different view, thinking 3, 5, 10 years out? How will we like to perceive this? How's the market like to perceive it? What's the level of upside? And a simple bar we have is, can we double our clients' capital over 5 years on that? I think if we do that well, it bodes well for ultimately client returns. But what we aren't trying to do is finesse what's the PE today, what's the next quarter's earnings, is there a surprise either way? We're trying to sort of step back from that and think about the structural growth drivers and, what's the like returns over 3, 5, 10 years.
Okay, so it really is more of a growth focus than a valuation focus. Not to say valuation is not part of it at all, but it's not the primary focus.
Yeah.
Okay. And we've got another question here from Alec, sort of focused on the anchoring versus reversing decisions when things change. So just wondering if you have any tools or practices to push yourselves to change your mind to the point of making a trade. So just offering this example of selling a stock and then realizing maybe it was a mistake. Do you buy it back at a higher price, or what sort of adjustments would you make like that?
Yeah. And I think for those that know us, we are very long term in our thinking. I think that brings a huge amount of benefits, and our portfolio turnovers across the various strategies is typically 10 to 20%. Emerging markets is typically sort of 20 to 30%, which is conducive with the opportunity set. So there are, I think that serves us well, getting it right. Where it lets us down a little bit, but so you're giving a little bit back of all those benefits, is we aren't as cute about the trading around the edges, fiddling around the edges. We have this saying, we're never going to trade our way to glory. And even looking at the moves of the last 3-6 months, it would have been a eureka moment to be calling out, let's sell half of the portfolio last September and to be buying it back today. But that's not what we're trying to do. We're trying to invest for very long time periods, generate returns that way. So I think that's the push and the pull from being long term versus short term. Just to indulge a little bit, what I think is really important and valuable is there is no buy list we have across the whole firm. Everybody can share their views. The digital library, you can write a note and frame your conclusion either way. You can have no conclusion. You can use the scrapbook to cite concerns or upgrade your views as well. So we try to be really open to the level of debate and challenge that we have. I liken it to when we have a portfolio construction group, our investment team discussions is knowing and trusting each other well enough that you can basically call each other names, and you've got to depersonalize the stocks when it comes to that. So let's have a lot of challenge around when ideas are going in and also existing holdings, and use that to try and guide how we change over time, rather than strict measures or price targets or getting too rigid about it. But I think the long term is probably the key answer there, and I think that gives us a massive amount of benefit. But it also means you give a little bit back over, could there be a move over a 3-6 month period and you get slightly wrong footed by that. But we accept that in part of what we're trying to do.
Okay. So once you've got your conviction, you pick your timing, some part of the storyline could change, but it doesn't mean you need to jump back in necessarily.
Yeah, that's fair.
Okay. Now another question here. Donovan's wondering, with the ongoing tech regulations, obviously tech, I think we saw was a pretty big focus in a lot of your graphics there. So with tech regulations being implemented by the CCP in China, how has that changed your research or thesis on growth companies? You called out Tencent, but like Alibaba or Baidu, how does that affect those?
Yeah. Well, I think that's a big one for, we can say, China. It's interesting. Just this week, there's a huge wave of there's a big paper out in Europe that there's a lot of similarities. So I think when we look at that took the whole world by surprise. A lot of those shares clearly sold off over the last year and a half. But when we walk through a lot of those measures, we feel a lot of it ultimately will be good for those businesses. Treatment of gig work as well. Avoiding garden walls, trying to clamp down on monopolistic behaviors, trying to have 1, 2, 3 companies dominating everything, closed data, etc. So when we walk through that very, very carefully, we actually feel a lot of those moves are in the right direction. They've just been very abrupt, very short order, and what it then means for the landscape in China that we think probably is more interesting. So I think where we would frame it is, it feels as if the goalposts have changed. 5 years ago, it was BAT, it was Baidu, Alibaba, Tencent. That's all everybody felt they needed to know. Those would be the anointed winners and leaders and across pretty much area of tech or internet in the market. What is clear now, and this links into the Carlota Perez type works, is it's going to be much more widespread. There's also society to think about. There's the government angle to think about. So broader stakeholders. And the big debate or challenge we like to think of is, what does that mean for the opportunities in China? So rather than getting het up on it's just a few tech platforms, what are the outlooks for those? Let's also be really open-minded about what new areas or segments come through in China. What are the new growth areas? And let's not just generalize about China as being one. And I find that quite remarkable. In an unconstrained portfolio I run with some colleagues, about 3/4 of our Chinese holdings are new over the last 3 years. And it's been about leaning coming in. It's CATL in battery technologies, about Longi in solar. So let's look for the opportunities that are coming through, rather than just, and accepting some of those challenges will be there for the big tech platforms, but what will be the new areas of growth as well.
Okay. So maybe it's not so much barriers as it is potential. There's potentially opportunity being sparked by these changes as well. So I guess that is promising.
Yeah.
Okay. Now it looks like that's basically the end of our questions that I'm seeing so far. So with that, and I guess we are getting close to the hour there, so we can probably wrap things up a little bit. Obviously, first off, I want to thank you, Joe, for joining us today and sharing your methodology and the process for screening out the noise and finding out those growth opportunities. Very valuable and interesting stuff. So it's always great hearing from your team, and hopefully you can join us again soon. I don't know, as an expression of our interest or of our appreciation, the CFA Society Winnipeg will be making a donation in your name to Youth Employment Services, which is also known as Yes Manitoba. So it's a local nonprofit organization that is dedicated to helping youth enhance their skills, find and retain employment, and it's all services that our society needs right now. So we'll be making a donation in your name there. Now, I also want to say thank you to Eva Swan for helping us set up the event as always, and thank you everyone who joined us for taking the time to virtually tune in today. And just want to do a quick call out as well. There's a lot of great programming coming up again in 2022, so I hope everybody's able to join us for that. And the big one, of course, is that our 57th annual Forecast Dinner is on April 19th at the RBC Convention Center. It's going to be CFA Society Winnipeg's first in-person member event since the start of the COVID pandemic. So, we're very excited that we'll be able to get back to it in that sort of format. So if you haven't purchased your ticket or a table yet, you should probably get on it as soon as you can. We've also got another event coming up in May, which we haven't announced yet. So we've got more details coming up shortly. And then, of course, plenty more in the later half of the year. So expect to hear from us again soon. Again, Joe, thank you to you and to Baillie Gifford, and to everyone else, take care and have a great rest of your week.
Thank you.